The bottom line is with Bitcoin, you have to start to be aware that there are factors here that are going to cause issues for Bitcoin. This is a long-term trend, right? You hammered on it here, you hammered on it right here, you broke above it, now you hammered on the opposite side. If we break below 28,500, 400 area and we confirm using the confirmation signal, that gives us now a downward channel or a break of the trend.
Bitcoin, the leading cryptocurrency, appears to have entered a steep correction and is giving back some of its recent gains after a 9-day run of steady bullish momentum. Bitcoin hit its lowest price since April 10th on Wednesday, dropping to $28,700 for a short period of time. The market downturn has affected many asset classes, including other cryptocurrencies, as the state of the American economy continued to worsen. At the time of writing, Bitcoin had dropped more than 4% in 24 hours, while Ether, the largest altcoin by market cap, was trading for less than $2,000, down 7% and at its lowest price in a week. Gareth Soloway, a well-known technical analyst, discusses the recent price fluctuations of Bitcoin in the latest episode of his broadcast, Weekly Game Plan. While some market watchers have predicted that Bitcoin is about to enter a new bull cycle, Soloway is still skeptical of a significant Bitcoin rally in the near future. The technical analyst gives a stance on the leading crypto asset and other cryptocurrencies due to the extreme economic uncertainties and a plethora of unresolved regulatory issues. Soloway outlines critical levels for investors to keep an eye on in the coming weeks. The leading crypto asset, and by extension the digital assets industry, is entering what many analysts and traders see as a pivotal period. During last week's show, Solo mentioned that $35,000 is a significant psychological barrier for Bitcoin buyers in the past.
We are at a major resistance. I've said this till I'm blue in the face. The 30,500 level is the level to watch. A lot of people kind of round it down to 30,000. No, the technical level is the technical level, 30,500. Look at what we've done right along here on the chart. Bitcoin has hammered on this over and over again. This is the daily chart. We even had a doji right here, which is a bearish signal, where it popped above and then got slammed down right to that level. I love how it flushed 2 days ago, rallied back, and now it's flushing again. The level I'm watching for short-term bias. So right now you're at resistance, but honestly, resistance can be broken. That's a possibility. If we break below 28,500, 400 area and we confirm using the confirmation signal, that gives us now a downward channel or a break of the trend. So for me, you're now, and by the way, these two lines are going to meet. So this is going to happen over the next week or two at longest. But right now, look for this support line right here. Also notice, I want to show you this, how if we connect these highs right through here, this line actually merges right at that point. So 28,500, 400, if we break below that, that is very bearish for Bitcoin. Okay, the other thing I have to talk to you guys about is there's so much FOMO out there. There is so much. You go on Twitter, you go on Instagram, you go anywhere out there. Everyone's talking about alt season. Everyone's talking about this. The alts are going to start going 100x or 10x or 5x, whatever it is. My issue with that is that basically because that narrative is out there, everyone's already positioned themselves long. If you haven't seen the alts go yet, and everyone's already believing that it's going to happen, that's a very, very concerning issue. Because again, think about this. Who's going to drive the alts up now? If all the little investors are in because they believe the alt season is coming after the Bitcoin run, how or who is going to now push it up via using massive amounts of money? That's problematic. Remember, the psychology of the market dictates, and psychology is key right up here. And hey, listen, we can go to, heck, let's go to some charts out there. One of the ones, by the way, Matic, look at this. This is not a good chart here at all. But Matic, again, guys, right on that support line, you're not seeing the price action, to me, that denotes an alt season rally, all right? You're not seeing it. And also, keep in mind, this is the first bear market where the Fed, this is what drives me nuts. Everyone's so regimented. I still remember when I was calling the high at 69,000 with the drop to 20,000, everyone was telling me, oh, you don't know what you're talking about. The on-chain analysis shows we're going to 100,000, X, Y, and Z, and I'm like, dude, The charts are the charts. Psychology is psychology. It's worked for hundreds, if not thousands of years. But somehow you're going to come in here and say that, oh, some new metric, on-chain analysis is going to play out. To me, on-chain analysis is the same as fundamental analysis. Fundamental analysis long-term makes sense. In the short term, it has nothing to do with greed and fear. Greed and fear drive the markets. That's just a simple explanation, and it's absolutely true. So when you have this scenario, guys, where you have greed and fear, guess what? Fear is going to trump fundamentals, on-chain analysis every time. We're now at a point, and I've said this before, number one, we're in a cycle where the Fed is not printing money. That's very, very tricky for Bitcoin. Doesn't mean Bitcoin's not going to break out here, but it makes it harder. So to think that we're going to get the same 4-year cycle when Bitcoin is not being propelled by massive inflows of money from the Federal Reserve, from the US government, etc., that's problematic. In addition, every which way, I'm seeing Gary Gensler and the SEC suing this person or this company or that company. There's a lot of issues here. Big money is not going to commit. So again, I bring my point back to saying, well, who is going to drive the alt season if all the small investors are banking on it, thus in? And the answer is, well, big money's not coming to the rescue because they're not willing to commit capital in major amounts because there's no clarity, there's no structure, there's no rules in the crypto markets yet. I mean, literally Coinbase yesterday said that they were thinking about moving out of the US because they have no clarity. And this is a publicly traded company. So anyways, my point is this, guys, be careful here, again, in the crypto markets. I have seen it before and I've seen it again. The bullishness in Bitcoin and crypto right now is equal to the bullishness we saw at 69,000. That to me is a warning sign because to me, that's a negative divergence. To see that much bullishness at such a lower price, that is not a good sign. Now, again, will we see new lows on Bitcoin? Will my 12 to 13,000, signal come true? Will 9,000 maybe get hit? I don't know. The point is, just be careful up here. Make it prove that we can get above 30,500 by price getting there, staying there for at least a week. Then you can start to say, okay, now for sure the lows are in. Doesn't mean we won't have pullbacks, but at least the lows are in. All right, so number one, let's talk a little bit about what's going on in the market. We're seeing the market selling off this morning. We have the S&P futures down over 20 points. NASDAQ futures down about 100 plus points. The kicker here is partly earnings, right? We got some earnings out of Netflix. We're going to discuss that in just a minute. But overall, really what's going on here is more than anything, you have some Fed commentary that is starting to spook the market a little bit. For instance, I believe there was one Fed, I don't know if it was Bullard, but he basically came out and said he doesn't see a recession and the Fed has to stay the course and continue to raise interest rates. Now, the issue with that is that we just heard last week from the Federal Reserve that we were going to have a mild recession. So there's this dichotomy, there's this divergence building within the Fed where some people are still saying, hey, listen, mild recession, but we're going to still raise interest rates. That's freaking the market out because the market is smarter. You look at the 10-year yield, it's all the way down. All right. You don't have the 10-year yield trading where the Fed funds rate is trading at 5%. You have it into the 3% range because the markets are anticipating that essentially we're going to have a recession. If the Fed is saying we're going to have a mild recession, and remember, their track record is that, oh, don't worry about inflation. It's going to be transitory. What do you guys think when they say a mild recession? Do you think it's just going to be like, nah, no big deal, mild recession? Personally, I'd be a little bit more nervous. All right. And again, that's the kicker. Not only that, but then you had, again, a Fed official this morning saying, hey, we got to continue to stay the course and raise rates. So at what point does a mild recession, which probably already means that they're telling you it's mild, but they know it's going to be worse, if they keep raising rates, what happens next? A mild recession turns into them telling you it's going to be a mid-level recession, and then it actually is going to be a much worse recession. And then you go, by the way, there are stocks out there, Apple, Microsoft, trading at valuations that they're almost at all-time highs. They're trading at forward PEs where they were a year or two ago when we had the bull market. That is not healthy. They are being used as a cushion. They're being used as a safety net. Those, to me, are some of the biggest shorts out there when reality strikes that we will see a recession in the second half. And it's not just going to be a small recession. It's going to be a long recession.
The United States economy has a perpetually bleak forecast. It comes as no surprise, though, given policymakers' penchant for distorting the truth and ignoring the obvious until it literally explodes. Do you agree with Soloway's in-depth assessment of Bitcoin and the economy as a whole? Use the space below to share your thoughts and opinions. That's all for today's video on Market Empire. We hope you found the information shared valuable and informative. Don't forget to subscribe to our channel and hit the notification bell to stay up to date with the latest news and insights from the world of finance. If you have any questions or comments, feel free to leave them down below. Thank you for watching, and we'll see you in the next video.